Seriously? Oh, here we go. There we go. There's that.
Ready to get a private class.
Right. Almost. Renovation loans. We'll see. Is this one in person?
Oh, I don't know.
Or is it? I can't. I don't know. I bet it's Zoom, but
Must be.
we have it on here, so. Let's look real quick. Yeah, there's a Zoom on here. Okay. Oh. Yeah, I feel like we've had been slower, and then all of a sudden we were looking at everything. I'm like, okay, Margaret's got a vacation coming up.
That means
you'll
get busy.
And then of course that means that like she has one hitting, I have one hitting, and then there's a co-list that she's doing with somebody that's like all three of those are probably hitting like all the same time right before she leaves on vacation. So I'll be like, I got this.
Yeah, no kidding.
Hey. Okay, so this has started.
Okay.
Do you guys want to join from whichever computer, and then we can make you a co-host so you can share whatever?
Yep, we'll join from that computer.
Okay. There you go.
Thank you, bro.
Yeah. Just want to make sure. I know Chris is like, we will be there.
Thank you.
Yeah.
Did you have a town?
Yeah, yeah.
Okay. I thought.
Sorry, I haven't heard back from Elizabeth. Yeah.
Oh, yeah, sorry.
No, that's okay. Do you have access to the Google Sheet roster of all agents here?
I don't know that I do.
We did at one time, I have.
I don't, yeah.
They say using it.
I'm sure they are. I'm sure they're doing something, yeah.
Okay.
I don't know, they probably are,
Okay.
unless they pull something from Command, but they have a market center version of Command that does, you know, that houses all the agents and stuff like that, so it might be something out of there.
Yep.
Joining. Okay. Oh, I know, right?
You're rolling some rebels.
Yeah.
Rolling the ball.
The gold fish. You know, that's gluten-free pretzels are all good.
Which ones? This brand or?
Yeah, kind of something similar.
Roll.
They're just, what are they?
The roll,
Oh,
those,
yeah.
yeah.
They're just thick.
Sticks, yeah.
Copper covered ones and yogurt covered ones.
Oh.
They're so.
Oh, wow.
It's the gluten-free, they're like even crunchy, crunchy ones.
But,
Crunchier than those. Yeah.
Let me know which ones.
Yeah,
Which
that's
ones
got
we
that.
get? They're,
You guys don't. Prove it.
Yes.
I don't partake, I'm
It's
so
good,
weird.
yeah.
Yeah.
That's the Gutino.
Oh, Butino, yes, I have them, yes.
That range for those two.
Yeah, they have a couple of good things, Butino, that. brand,
Yeah.
The Oreos.
Yeah. What's-
But there's the.
Oh, I haven't had the Oreos to do this, but-
Regular Oreos.
Oh, my gosh, a lot of times they'll have soy and I can't do soy. Yeah.
Okay. She is a co-host.
Here's my charge report, so.
Okay,
And then you should be able to,
what was the first thing you just?
oh, I just said she's co-host, so I should
Okay.
make sure that,
Hi, Tiana.
she should be able, hi, yeah. To share screen and all that kind of stuff.
Okay.
Everything else good? So.
So do we?
Okay, so I think I just need to share my screen. Does that sound right?
Yeah, I really.
Alright.
Oh. Yeah. It's. And these, they left all these like floor ones in, and they're just not, I mean.
I trip over them.
I know.
Trip.
Yeah.
And then you have to like, so, and then my laptop, like my old one, my new one would fit, but my old one, my laptop charger, it was like, like it had a longer thing. I could never even use these because they're,
Yep. Oh, that's.
these are just not useful.
Yeah.
Yeah.
I'm gonna leave you go.
We can play video.
I don't remember.
Hey.
I do remember.
Okay, no,
Was I mute my only one, right? 22?
yeah, I
Did you
do.
hear me?
Yeah.
Yeah, that's
Maybe
how
for your-
right?
Gianna, can you hear us?
Yeah, yeah.
Yes.
Yes, okay.
I can, thanks.
Great, thanks. All right, well, I think it's just like
Perfect.
4 or 5 of us. Okay,
Grab one thing here real quick, I'll be right back.
thank you.
Thank you guys for having me in.
Thanks for hosting this. Yeah.
Yeah, we can play the beer pong or something after.
Okay. That
Set it
works.
up right here.
Yeah, I like it.
Yes. Yeah, actually, I had a dream this morning, my wife had a ping pong ball, somehow got smacked into her mouth. Stuck in her throat, and she's laying there like,
Oh, no.
gasping for air.
Bizarre.
And then, what do I do? So I'm pushing her chest down until I give her mouth to mouth, and it was like this, I'm not gonna give you graphics, some weird stuff, and
Yeah.
I not shouldn't have been there.
Yeah.
Like, I don't know, I'm touching it. And I woke up, thank God.
What a
And, you know, it's hard.
How random.
That is so random.
Are you processing?
I don't know.
Probably. Yeah.
You don't want to see me American Greed or anything. Anyway. Said beer pong, it was a ping pong ball. Remind me of that.
I wish my dreams had a little more sprinkle of interesting. I like dream about laundry and the
Right.
grocery store. It's good brain.
Yeah.
So boring.
Games change as you.
Oh.
Do they really?
I don't mind if I was.
Seems like mine do.
That it was such a big matter of fact.
Seems like mine do. I think you because your experience is just so.
Yeah.
Looking at
Sure.
children, et cetera. So, all right, we got people who want to hear about our dreams anymore.
Wow.
Okay, well, we had one more join us. Hi,
Yes.
Candace.
Okay, good.
All right. Oh,
And
and yeah, great.
Okay.
All right, did you want to start?
Sure. So we've talked about this loan program before, it's really loan programs. Because there's more than one renovation loan program, which is very nice because it opens the door for different opportunities for people who are looking to use an FHA loan to buy a place and do improvements as opposed to a Fannie Mae loan and do improvements as opposed to a construction loan. So there's this whole list of different options. The nice thing about CMG is that we do those all in-house and internally. We're not brokered to another investor to run and manage. And that's the nightmare part of it is after you close, how do you then manage the actual project to get work done? And having access to the money and the right people to pay the contractor paying subs is a really big deal. So we've been able to streamline that and create independent departments within the company to handle these kinds of loans. Just like our condo department, just like our all-in-one department, we have different departments because they're such unique programs. So what we thought we'd do today is go through the different opportunities of options that are available and some of the parameters about each one so that if one client says, I just want to do this, I need $25,000, I just want to do cosmetic improvements, that would be one option of a loan as opposed to I want to do a $250,000 remodel. That's another option of a program that we can offer you. So this will be good to help break that down. And then we'll send you a copy of it, so you'll have it. And then that way you can reference back if someone says, oh, I think I want to do this, at least you can say, oh, there's a program there. You may not know the details or remember the details, but that's really good for you. So. All right. We'll move on. So there's gonna be some kind of statistical things. We'll talk about this first. So what we're gonna review today is what's a renovation loan, the types, the eligible and ineligible repairs, which is really important, like the pool is one of those caveats. What's included in the loans, the advantages, tips, and the opportunity. Bringing this to you guys as the real estate community, it hopefully will help you create more opportunities for clients who go and look at a home. The home is either just dated but in good shape or dilapidated, but they still want to do the improvements. This will give you some guidance that you can share with them and say, that's okay. We can do something to help you make those improvements and still be able to buy the home and build it into the new loan and the purchase price of the property. So,
I think buyers get burned out. You guys have seen this where it's like, we've seen 50 houses, none of them work in your budget. How do we then slim it down and say, we can still make this house work, and we don't have to look at all those houses, and they don't burn out and just say, forget it, I'm for rent. Right, can this be the solution for that? And I think it can.
Sure. All right.
Oh, if I have this, oh yeah, it's a
Go
little
ahead.
bit slow.
So just some backstory, 60% of homeowners, they'll do improvements, they'll spend a bunch of money, they call it 400 billion. Just more debt, it's okay, it's just part of what we do. However, what we're trying to do is make the home be the home that they want to have by creating that obligation in the loan now, as opposed to putting on higher interest rate credit cards and be able to actually deduct it on the taxes.
Yeah, that's a good point, because it's mortgage interest, right? You're not just throwing it on a credit card.
So they can do remodels, upgrades, they can, as I mentioned, second, purchase a home as is and then include those improvements that they want to do. They can refinance their home and make the changes. And they can do it on single family, 2 to 4 units and condos. I know condos are more difficult because can't do anything really externally. So sometimes they just need $5,000 to do a bathroom. We're not gonna guide into doing a whole remodel, this kind of a loan for that. We just say, go get a home equity line of credit to pay for it. Or put it on your credit card with the agreement, trying to pay it off as quickly as possible. So we'll help guide them to what the right opportunities are. But you can do it on use, which is good, really nice.
Yeah.
Okay, so here is the opportunity. 78% of homes in America are 30 years old or older, creating a huge demand for this product in all markets. The decline in entry-level homes is stark. So, they're building these big new construction homes now. There's not a lot of entry-level homes that are those single-family units, right, that are smaller. We are faced with the shortage of affordable homes. So we're in these, fix it up type of houses that are available, especially for those entry-level homes. And home renovation loans create that opportunity. All right, so here are the types of renovation loans. We don't want you to remember all of these, but it's good to know, especially that there's FHA and VA. Right, VA is obvious. If a veteran wants to do the renovation loan, they can do that. Where FHA comes in, I've done this where it's an FHA buyer, they have to use FHA financing because they have a credit history that makes it that way. And they want to buy a house that isn't FHA eligible, right? The list that the seller would have to do to make that house work is too long. They are not accepting FHA buyers. However, they could if that FHA renovation would bring that house up to par to fit those FHA guidelines, right? So if you have an FHA buyer, they find the house, but you're like, you can't buy a fixer-upper, dude. Actually, you can. Let's talk about how we can work that in to the renovation.
And so I asked them about that point. So like if someone is touring a house and it has half of the appliances or floor missing, it'll qualify just by doing this type of loan.
Correct, because the work will be done
Yeah,
at time of buying, right after closing,
okay.
guided by us, and it has to be done properly, et cetera. But the work will be done to make it up to FHA parameters.
Yeah.
Yes.
So it's a great opportunity.
Yeah.
The most that I have done as far as these is like an FHA renovation loans. That's the number one. So
Yeah.
In construction.
So here's just some of the basics to differentiate some of those loans. Really the key piece is that they can finance in a certain amount of payments and the down payment piece, right? So for a conventional renovation loan, they have to do as little as 3% down. So the down payment is not just on the purchase price, it's the purchase price plus the cost of the renovation, right? So if there's someone who's saying, I'm gonna put 10% down on a house, but maybe we need a budget in all these renovations, maybe they put less down. And we also talked to them about too, maybe some of this you can pay for in cash and we can just do less, you can finance more in the loan or what have you. For a conventional loan, they can finance up to 6 months of mortgage payments. For FHA, it is for up to 9 months of mortgage payments for the renovation loan. There is a consultant required. We take care of that part, so you guys don't have to worry about that piece. That is just to make sure that everything is done up to par and they're kind of babysitting the contractor, if you will. The FHA 203K limited renovation, this is a maximum repair amount of 75,000. So Mitch, do you want to talk about kind of what you've seen the differences between these two and what is more common in your world? You think?
Yeah, both are more common. It really depends on what the renovations need to be. The 203K S, S stands for streamlined, that's what the editor is. Used to be they kind of go to, it only used to be $25,000.
I was surprised to see
Then they
that.
raised it to 50, and now they've since raised it to 75. Because it's just more realistic of the cost of doing anything on an improvement. So if someone says we need to do some improvements, appliances, carpet, roof may need to be replaced soon, they decide to do it, it's not a requirement to buy the house, but they know how to do that. They can build all that in at time of buying the property, as long as the value is supported, so that's just when Dale mentioned it's added to the price of the home, and that's what the down payment is based on. It must also appraise. So you can't say, I'm gonna put in 100,000 of improvements and the house is worth 300 now, but it only is worth 325 after improvements.
So it's ARV.
It is ARV.
It is
Yes,
ARV.
correct.
Okay.
So,
So if they're like, I want to put in a bowling alley, well, that might not actually be that valuable to most people in the market, right? We want something that's actually going to be worth valuable.
an investment option, to
Maybe.
charge for bowling, use your rental.
I like how you said.
Just finished watching our home neighbors. And one of the houses, this guy, he had a bowling alley, and
Yeah.
we go like spraying shoes, and that's kind of funny.
Yeah, so we wanna, that's part of your job, is talking to the client about, okay, here's what the house is worth now. If you do all these things, this is what it will be worth later. And that's also a part of selling the house and selling them doing this, so you don't have to keep looking at 50 more houses, right? Hey, if you put in $50,000, I actually think based on these comps that have these similar finishes that you're choosing to do with this renovation, it's gonna be worth $75,000 more. So look at your built-in equity you're doing by choosing this path.
At what point, sorry,
Oh, go ahead.
at what point do they appraise it? Like, are they looking at our comps to determine the ARV? Like, what's?
No, they're gonna do their own appraisal.
They're gonna do
They
their
know
own.
how to do an ARV appraisal.
Okay,
We're
all right.
supposed to know how to do
So
it.
they'll do that in lieu of the regular appraisal of what it is.
They look at
It's both, yeah, it's
Okay.
actually both.
Yeah.
So what we end up doing is a contractor will put together the bid of the line items that they're gonna do, that is supplied to the appraiser along with the contract, so they know what they're appraising with a completed home
Sure.
versus, well, here's what we think we're gonna do, it actually has to be going at about waiting bids as soon as possible.
Okay, so what are the like, how do the contractors get approved?
Depending on the type of loan, if they're doing a 203K, it actually could be the borrower can do some of those improvements, it just can't be electrical or plumbing, that kind of stuff. Unless they are an actual licensed person to do that, and then there's some wiggle room for that, yeah. But they can't build an entire home, do a massive remodel, they always have to have a third party contractor for that.
Sometimes it is big, for these ones, it's very, the 203K streamline could be just, I want all new appliances.
Yeah, it's fairly cosmetic, limited, one of the line items that you can.
Buy some appliances and paint the walls and replace the floor
Yeah.
and whatever you don't need a
Easy stuff.
GC for that, you
Right.
can just, okay.
And you don't have the cash to do it, or you want to preserve your cash for
Right.
other things. So it's just
And
depends.
what is the timeline then on these?
So the 203K S needs to be done fairly quickly,
Mhm.
ideally within 60 days, because they're usually not massive improvement construction. The 203K can go up to a year. It's like a kind of a typical construction.
Yeah.
Sooner the better, because this makes it easier for everyone, because we don't have to manage these projects, we're managing the project for payment.
Right.
So the sooner the better, so the intent is going in saying, hey, you gotta be ready to go the day we close or pretty close.
Yeah.
Depending on permits or whatever, so.
And has to be primary home, correct?
It does not,
For
no,
FHA.
FHA, yes, sorry, FHA, yes,
Yeah.
not
Okay.
FHA.
And for those two, the mortgage payments can't be included in that streamline, so they should be living in the house, making their payments. The purpose for these other two, these are bigger renovations, we can collect those payments, so they're not thinking about, all right, what if I have to live somewhere else? Well, my house is being gutted, I can, we can hold on and finance in up to, for this one, 9 months, this one, 6 months. And they don't have to worry about trying to juggle. Or trying to live in a house that really is.
So they're actually deferring the payment
Yes.
for 9 months.
But then moving it out of, over the term.
Well, they're financing it. They're not.
Financing it.
It's being prepaid upfront.
Got it.
Yes.
Okay.
Yeah.
When you have the one, like when you guys say that there's a consultant required and you're handling that, so like a fee that they.
Yes.
Added in.
Yeah.
Yes.
Yeah, it's $0 to $3,000
Okay,
based on the cost of the improvements.
Yeah.
So like 203K S, that's probably $500. But if you go into $1 million, I just did one for the $350,000 improvement, so we did a Fannie Mae one, because it was a big job, and it was $2,000 for that.
okay,
The
Yeah.
house was $900,000. Oh,
There- Yeah, there are more costs involved, right? There's a lot more management, there's a lot of moving pieces. We wanna make sure that we are holding whoever's getting the money accountable, right? We're taking on a higher risk to give money on something that doesn't yet exist. Right, we're saying, here's this money for you to go add this addition. Hope you do it. So we wanna vet that person, we'll talk about it. This is later in the presentation, but it's easier to just talk about it conversationally. So, for those ones, we are vetting the general contractor. We're saying, who are your references? We wanna see your tax returns. We wanna make sure that you are accountable and we can trust that you are gonna use this money appropriately.
And complete the job. More important.
And that's nice for your client to know too, like, hey, we know you're interviewing the contractor, but we're gonna take care of vetting their financials and making sure they're accountable as well, so you can have that peace of mind.
And think of it, other than the 203KS, think of the other two as a mini construction loan.
Yeah.
Same coverage, same background check, same everything to protect both the client and TMG from exposure to having an unfinished property. Because the contractor goes, I'm out of here, sorry, this is what I do, I just gotta go 3/4 of the way and I'm done. Now what?
So they actually pay them up front.
No, it's per, they get draws.
Oh,
and all that
okay,
stuff, yeah.
gotcha.
Normal.
Yeah, but if they go, we're done, we're just not gonna do any more work, cause I don't have my crew left me. So
Yeah,
weird stuff happens.
yeah.
We've all had to down the road of some version of construction, all of us here, so. So just, we have to protect that for you.
Yeah.
Most times it's fine,
okay.
but
Right.
there's risk.
Yeah. So this is, I would say there's nothing too much different as far as a VA renovation compared to the FHA. It's a VA loan, added that the renovation steps, and we're gonna communicate with the contractor and do that same vetting process, very similar, right? As we mentioned, these can be for a purchase or refinance. You might say, why would I care about a refinance? Anybody have anything come to mind? Why would you talk to your client about refinancing to do this? Other than just being a friendly neighbor.
Maybe their house is nicer, cause they don't need.
How about you have a client that says, I don't have a lot of equity in my home, but I really wanna sell it maybe in a year. And it's not in great shape. Hey, you can refinance and do this renovation loan. Let's fix it up now, you can finance in those repairs, so you don't have to front it. And then your house is gonna be much more marketable, and you're gonna sell it for a greater price come spring. Right, so, as always, say when we do these loans, we wanna help them hold it out at least 6 months, right? So this is not someone selling in a few months. But they can with that forecast of, hey, I'm gonna list it. For this timing next spring, this is the perfect conversation to have.
Is that only VA or is that?
No, that's all.
That's
all.
across all boards. Yep, FHA, VA, conventional. Oh, sorry, were you stretching? And so then when it's a much bigger renovation, like an entire home reconstruction, then we're talking about a different type of loan, right? This is basically a construction loan. They can build on a vacant lot. It's 10% down. And this is not a renovation, it's just a construction loan. That's the basic difference.
Yeah, just to piggyback that on that, and that is I've done one of these, so not mine, where they had a home and they wanted to add on to the home. Instead of moving, and they have to ideally increase the size of the home by 50%. Of the
Say
existing
1.5 or 5.
50
Okay.
to allow it to fall into a renovation construction
Okay.
as opposed to a full-blown construction.
Okay.
But they can do it that way, and it's easier to do that, but they have to have that kind of size added on. I mean, it was 42%, I'm sure we can make that exception, we just have a little bit of support that it's really a bigger job than 10%. I want to put a bathroom on, a new bathroom.
Right.
Right, but if you're gonna do a pop top and double the size of
Exactly.
your house, then
That's
you do
right.
that.
Yep.
Yeah.
Right.
But we'll do those opportunities as well.
Yeah, we just bring that up to say, we can't do those. If your client is looking for a scrape, things of that nature, we can do these type of loans and help them finance in the cost to build their house.
And we always talk about that all-in-one loan that we do. So we've now introduced that into our construction loan with the all-in-one loan tied into it. Which is, for those who understand the all-in-one loan, when we talk about it with our clients, they're, I just get big, like, I have no idea, you can do this, this may be a good option for them. At that time, when they learn about it. Because they just end up with that loan, they don't go do another loan after the fact, they end up with the all-in-one from the
Right.
get-go.
Right.
It's an amazing loan for people who fit the profile that makes sense for them.
Sure.
Right.
But throwing it into construction was a big deal for us.
Can you use it, sorry, I'm asking a million questions.
No, I
Can you
love
use
it.
for, a garage, to build an add-on garage?
Yeah, sure,
Really good mother, hold on.
yeah, exactly.
Our renovation guy,
Right.
and you know, a little bit. Our renovation guy always geeks out. He loves the idea of just, hey, you have your house, you got a big enough lot. Let's just bring in on a truck a manufactured home and just stick it in the backyard. I mean, he will sell that all day. He's like, this is brilliant. Why isn't everyone doing this? Because it really, you can do that with this. And then
Enhance the value.
make it into a bowling alley.
Yep.
You know, all roads lead to bowling.
Two lanes.
Example.
I have a question.
Ray, I got a long
That
enough.
really small thing.
Actually, it does.
Can we build an event center?
LTUs.
We don't know, we don't know after you close.
That's
I will say, what you want to avoid is your client buys the house and they do half the project and it's a mess, and then they want to do a construction.
Yeah.
They don't like to come in mid
No.
part. So if they want to do that and they have their own funds to start it, we still need the construction loan approved at the beginning. Their money is still, we're not gonna make them borrow on interest on money until they need it, right? So their money gets used up first, and then we come in with the loan. They start paying on the interest on the draws as they need it. That's what's also cool about these loans. It's not like, oh, I'm borrowed on the construction loans, I should say. But they're only paying the interest on the draws as they need it. It's not, I'm paying interest on a $2 million loan for this big house that I'm building up front. It sure has.
This accumulates as
Yes.
the loan balance increases.
In terms of timing, so buyers are touring homes, they identify one that they like, needs some work. At what point do we get a bid for the work? Does it have to be all tied in at offer?
No.
But it has to be done before we can get a final loan approval and get
Okay.
appraisal ordered.
Okay.
So is that like a 30-day process or is it more?
I would do a 45-ish,
Okay.
maybe.
Close, for the close, you do 45, so that you have time to do the bids and.
Pick the
Okay.
contractor. So if you have a client who has a pretty good feel for that, that's what they're looking to do.
Mhm.
I would say to them, you need to get a contractor now.
Yeah.
Let's vet that contractor, so that link is out of the equation.
Mhm.
If they don't, if they don't get approved,
Mhm.
they gotta find a different contractor.
Mhm. And it may push.
Plus a contractor who has time in their schedule, depending on how long, like,
Right.
if you need to do the 60-day one,
Mhm.
some of these guys are booked out for 6 months or, you know.
Yeah.
And then they can't do it, and unfortunately, there's a
Yeah.
time limit for
Mhm.
money to get paid back.
Exactly.
Not for the work to be done,
Yeah, exactly.
And if you've ever worked with a general contractor, they hate doing paperwork. It is their least favorite thing in the whole world.
Yes.
So, if we can get that part done early, I mean, that's a common delay. It's just like, we still haven't been.
Yeah, yeah.
You see what that question was? It went away.
Totally.
Someone living in.
If someone has that question, you can unmute yourself. I think we saw something pop up.
Yeah, I didn't want to interrupt. So I was like, okay, before I forget, I'm just going to pop this in there.
That's it. You want to ask the question?
Sure. So for someone that's already living in their home and does have significant equity in it, and then is in that situation where where Dale mentioned that they are planning to sell, what would be the benefit of using one of these renovation loans versus a home equity line of credit?
There may not be a benefit.
Okay.
We could help them with a home equity loan to get the money out to do the improvements without going through the entire process of a construction loan. And I wouldn't advise it if I knew they were selling quickly, probably wouldn't be the route. The
Right.
construction route wouldn't be the route.
Okay, so home equity line of credit
Mhm.
may likely be the better option.
Yes.
Okay.
Quicker, and less expensive upfront.
Yes.
And then you mentioned that a couple of them were, was it the VA and the FHA renovation loans have to be used within 60 days of closing or applied for?
No, only the FHA streamline loan is the one that's a quick turnaround and has to be done quicker. All the other ones have anywhere from 6 months to a year. It all depends on the project, really. It really comes down to that.
Okay, and then in terms of completing the project, because you said you don't have to pay out, it's like draw as you go to pay off the vendors. Then you can, is there any type of timeline for when you need to decide that you're going to use up all of the loan or close out the loan?
Yeah, so we'll talk about that in a little bit. So we manage the fund, including a reserve in case they go over budget. I think that's what you're talking about. So then when it's done, if they have any money left over, that then would reduce the principal balance of their loan.
Is that your
Oh,
question?
gotcha. Okay, cool. Thank you.
Yeah.
You're welcome.
Once the project's done, if there's any money left over, that money is refunded back to the client in the form of a reduction of the loan, principal loan balance.
And you guys don't need to remember all the differences between these loans. It's easy for us to talk about. And we'll help the client. We'll talk with the contractor, we'll talk with the client about their project to know what product it's gonna fit best under, right? Okay, so eligible repairs. You know what? I like this slide better. Whoa. I added animations and I think it got a little crazy. Okay, so here we go. Eligible repairs and improvements. So roofs, gutters, downspouts, HVAC systems. Love the house, but it doesn't have AC. Plumbing, electrical systems, replacing flooring, or minor remodeling such as kitchens. No load bearing wall changes. That's more of a construction loan. Okay.
Oh, so what is this eligible repairs for then?
For renovation loans.
Oh, okay. So if you want to open up a wall, you can't do a renovation room.
If it's a load bearing wall.
Huh. That is really interesting.
Yeah.
Because you will allow structural, but not, okay.
Yeah.
Yeah, I mean,
Structural repairs, right? That's, okay.
Does that sound right? I took this from the CMG.
Yeah,
I just, I did like that.
I've seen it be,
Okay.
Okay.
yeah, and you just put a line right.
Off the record.
No, it's on there, that's fine.
I mean, I get it that you have to go through some more hoops if you're doing a load bearing wall change, but.
Yeah, you
Right,
can
comment when we're like, let's make this open.
Yeah.
Yeah.
And also,
I agree. I think it could definitely still.
Yeah, you're
it
like,
also brings in the accountability for timing if you have to pull permits.
true,
Because that's also in there.
Yeah,
Right, and that
right.
timing is built for that too.
yeah,
Careful, an architect and.
yes.
Yeah, those-
Mm-hmm.
interior and exterior painting and siding, repair, replace, upgrade storm windows, doors, insulation, you name it. Lead-based paint abatement or mitigation, that's allowed. Freestanding, as we said, or built-in appliances, we could just put those in. And handicap accessibility, so that's a big one. Yes.
Do you do lead-based paint, will you do asbestos? Or no?
Mitigation.
Mitigation?
I don't see why not.
That's a big
I
one.
mean, if you mold, there'd be asbestos, you know.
Yeah,
Yeah.
okay,
As long as it's known up front, it's added to the actual bid.
Right.
okay.
Yeah, there's some of the loans are very specific, it says. You can do nothing different than what's on your bid. Even if you run up against something that requires it to be done before you can do what you want to do with the bid.
Then you would have to
Yeah, pay
pay
cash.
money.
Exactly.
Yeah.
That's it.
Yeah, so,
Yeah,
yeah,
have to be, so you should throw
Sorry.
everything in and then like.
Yeah,
walk
money
back
left over, you may have some left over.
yeah,
Yeah,
Back to the question of what do you do with the excess funds?
right,
Reduce it for $1.
okay. Wow. that's good to know.
Yeah,
interesting.
it's a construction loan, right? Many construction loan, even
Yeah.
these little cosmetic ones could open it, they can't.
Yeah.
Somewhere else, but.
So what happened, yeah.
I think this slide was more to say it can kind of be done for a lot of
Right.
things that a client is actually looking for.
Okay.
It can repair an existing pool, add up to 3 units to a primary structure.
Right.
Relocate a load bearing lot, dude. That's
I understand.
They.
Okay. Yes.
Yeah.
remove multiple units, so you know, duplex and you want it as your single family, you can do that. Repair structural damage, increase square footage and tear down and rebuild on top of existing foundation. This is basically to say pretty much everything under the sun. Besides, you can't do landscaping, grass, trees, or time taken care of. Okay?
Really important.
Awesome.
Wait, but I can add rock or something, right?
Yes.
You can't die.
You can see the scale.
Right.
You can do fencing, and there are renovation loans, not the FHA, but conventional will allow you to install a pool.
What?
Yeah.
FHA won't, but
Yeah.
conventional will,
That's
okay.
That's crazy.
Yep. Yes.
Okay.
Yeah, they're just like, I need a pool.
I
Great.
gotta move.
Yeah.
I don't like that.
Yeah.
Yes, really. We need for.
Interesting.
Don't worry.
Okay.
Thank you. I wonder if
Yeah.
there's anything on here that we missed. I think that was it, basically. Yeah, we talked about that.
Yep.
Finish the basement was one we didn't mention. Like I said, pretty much everything under the sun, right?
Cool.
The majority of the
Oh,
questions
yeah.
that we get around these things are, can I make improvements to make it so I can live in the home now? Right? And or bring it to FHA code
Right.
that are parameters. The other things we talk about, but those are the ones that actually come to fruition, to actually become transactions.
Yeah.
I did that one I mentioned, the $300,000 one, and that was great, where it was a win-win for everybody, so. It's just creating the opportunity to let your clients know that it exists.
Right.
So that when you're out showing in sometimes limited inventory, the certain price range. That you can do certain things to help make it what they want. Because let's say that they can afford 500, what they really want is 600, but if you do 50,000 improvements, you get that 600 finish of what you need.
Right.
But they can't afford 600, but they can't find what they want 600, right, with all the things and reasons, but it gives you that conversation piece to say, are you aware? Most people have no idea you can do this, by the way.
Right.
Any realtors that are, you don't even know you can do it, or how to do it. And it's also something you can talk about at open houses that you know needs some love. You can come with these open house flyers, we had 4 renovations specifically, so people can see what it could look like. With AI, which is what we obviously don't, it's used to then go, hey, here's the house looks like today, you're walking in now, here's a rendition of what it could look like. Did you know you can get a renovation loan to actually make these improvements? And they're gonna go, I had no idea. Yeah, whether they're gonna buy the home from it, who knows? But you've now opened up a whole nother opportunity for them.
Sure.
And then you say, has your realtor talked to you about this if you have one? No, well, I think you need to switch. Let me see that contract.
Good for that. It's ripped out of his mouth. Doesn't matter.
And that lender of yours, awful. We got some people for you.
And if you really do wanna do that too, it's helpful, so helpful to have some people in your pocket, those contractors, you know, because that's the next. You know, how do you make some more relationships? And they can benefit as well, right? So, hey, did you know we do this? You know, maybe you get some kind of mirrored referral business from that contractor who's saying, hey, I have this client that wants to do this, they're gonna sell their house, blah, 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 great,
Another
right.
connection.
I would say another conversation that this comes up in is I've had a lot more conversations with people who want this like family compounded type of thing, right? Like my kids can't afford to buy a house and they're gonna have a kid and maybe a duplex or it'd be ideal if they had their own space. Great, we just bring in the unit. Yes, of the house you're buying, you know, and if you have an open house or a listing that has an ADU and you're getting a lot of those people in, those are great conversations too. Are you looking for a 2-unit and having a hard time finding one that fits? Did you know? You can build it. You can build it and finance it.
Yeah, it's more effort, obviously, to start doing that than just buy a home that's done. But it's just showing that you know what you're talking about to create opportunities in their mind, to build the trust, to build a relationship, and then they go buy a regular house, right? But you help.
Totally.
Yeah, and that's okay, but now you know, we talk about loans for people all the time, they're like, oh, I'm a 30 fixed rate. As opposed to,
So if they do like the dual unit thing, like when they do these loans, do they have to have the permits and all done before, or is that something that comes after? And then what if the permit's not approved and they just buy a house, they wanna renovate that?
well, that's gonna be dependent on, really relying on the contractor to make sure it can get done.
Okay,
That's something that they could at least, nobody wants to spend money until they own the home.
Yeah.
Mostly, right, other than
Right.
appraisals and inspections and all that. So the contractor needs to be pretty certain that if it requires the permit, it will meet the guidelines for that, zoning for that county you're in, that you can get that.
okay.
Yeah,
Right.
yeah, a lot of this stuff doesn't require a permit, a lot of the cosmetic stuff, that's a little bit of walls and doing add-ons and all that, totally different. But some of the simpler stuff doesn't require that. Okay, yeah, and a lot of people don't pull permits. Yeah. We may say, this is a permit item, you gotta go get a permit. You can't not do that.
Yeah.
So.
Right.
And we're gonna put them in a product that allows them the time to get the permit, right? This is not.
That's
too
too
much.
brainer, yeah.
So the renovation account includes the cost of repairs and updates. A contingency reserve for cost overruns and inevitable surprises.
Let me just say that, just percentage wise, because that's a question I know, how much do we need to put in there? It's typically 5 to 10%, depending on the size of the project. So I'm working on a $2 million scrape and rebuild right now. And the builder wants a 15% contingency because they've seen people buying building those expensive homes saying, oh, but now I wanna add this, and this is a very expensive addition to what they already created. And that makes sense. But sometimes again, these small little cosmetic things that, you know, I forgot I need to actually get a dishwasher too. I forgot. Yeah, but that contingency is really, really important for the client to understand it's gonna be a line item to increase that amount of loan.
Right, so if, for example, they're saying I'm gonna do $100,000 renovation, we're saying we're gonna call that 110. We add that to your purchase price, that becomes the price, if you will, and then their down payment comes off of for that. Not even you know all the details, but right.
Yeah, that's just good pretty good.
Yeah.
If they're just scraping by the extra 10,000 could make a difference. 3.5% of that, $350, not a lot, but. Yeah, how many clients have we got with the other $350 makes a lot of money, a big difference, right? Yeah.
Right. The consultancy, if applicable, again, so this is stuff that's included in the loan. The title update fee, so that's as the loan is updated. The supplemental origination charge for doing the loan, inspection fees for draws, so if it's a bigger loan where we're having to do draws to general contractor. This is another thing that helps your client get peace of mind. We have an inspector making sure that that general contractor is accountable. So if they said the work is done, they're gonna check, make sure that work was done before they give them more money.
And both buyer, owner and contractor sign off on the request before we'll relinquish the check.
So separate or additional to city inspectors, your own.
That's correct, yes, correct, yeah. And the title update's a big deal, people are like, why do I have to update title? Well, what if between the last draw, a lien got placed on the property, now we need to know if something changed, and that could affect the completion of that project. So that's why there's this continuous updating, it's not thousands of dollars, but it's $50 a year, $80 a year, yeah.
Thanks.
Architect fees, structural engineering costs, and permits, they can all be included in the loan. Oh, sorry, that was it. Okay, so it's a real win-win. Help your client visualize, we've already kind of talked about most of this stuff. And then, again, listing agents, increase your pool of prospective buyers, we mentioned at your open house. Does it make sense to have a renovation flyer with you? All right. Turning cash only listings into financeable properties. These are all win-wins for your sellers and buyers. All right, so to help your buyers prepare, you want to connect them with us. Help your buyer make their wish list. You guys probably already do that. Coordinate the home inspection to determine the necessary repairs. So they might say, well, I want to do all these things, but also what do you need to do, right? Finalize repairs and updates, and then we'll do the appraisal, and the appraiser does the AVM, but it's also, I'm sorry, ARV, but it's nice for you guys to also have a perspective on that, so that they're not signing up for, they're wanting to include things that don't actually provide value. And then that licensed contractor.
And that's the key to this whole thing, in my opinion, we gotta get that person approved immediately. We have a whole packet, we just send it a PDF, it's fillable, they submit with some of the items that we need from them, insurance, year or two tax returns and a resume. Goes to our construction team, they'll review it, takes them about 48 hours to review, come back and say, everything looks great, but I want a letter explaining how many new, like this new construction I'm doing. They want to see someone's done 10 transactions in the last 5 years. And this particular builder works on very, very high-end properties that take 2 years just to build one. So he came back and said, look, I do these high-end properties, I'm not doing 10 over that time frame, I'm doing this, and we were able to prove it, but we just need another further documentation to support why he hasn't done that many in that amount of time. So we're pretty flexible as long as the builder is well qualified outside of everything else.
So if you hire a GC and they fill out the packet, do you then also have to have the subs, his subcontract? No,
It's just
the GC, got it.
Oh yeah, that would be
Right, that would be.
It would never get done. Just like it would close the transaction. It's
And some of those subs, you never get them to fill out. the
I
paperwork.
know.
no, it's not. It's all. I mean, at some point you gotta go. Okay, who's the leader of all this?
Yeah.
You guys have to.
Yes.
And how do you differentiate between what a individual can take on versus what needs to go to a contractor?
I mean, it's gonna depend on their history of doing, like if they're a licensed electrician.
They may
We
be
might
that
give a
portion of the
concession.
improvement,
Got it.
but not the entire project.
What if I found a house, I'm like, yes, this is what I wanna do, I wanna live in it while I, fix it up. I determine that this is for me. Can I, I've never laid flooring, is that,
You can't do.
okay, so.
It's not a owner user improvement project.
Got it.
It is always either a contractor, unless it's like I'm putting in appliances and things that just need installation. And
Right.
it's gonna be that.
Okay,
So it's really,
You see your own,
that's
as
correct,
the home.
that even if you're a GC,
okay, got it.
yeah. And it's just, and there's all the things in life to get in the way to finishing your own project, because you're working on everyone else's projects.
What do you mean?
And that 6 months became 6 years, that's why they won't get a lot of years.
Yeah.
It's everywhere.
Yeah, that happens. So,
I just want to be like, yeah, I'm kind of like sub under my GC, like I can do this thing or that thing to help it along and. What we know, if we don't know, it doesn't hurt us. Right?
and we'll go to bat for the client and just bring that into our construction team and say, what can they do? Here's what we know they have licensure for us, and you send a copy of it if they are. What can we do here that we'd be comfortable with?
So for the appraisal process, the appraiser, sorry, am I taking over too much?
Nope.
Okay.
Keep going.
All right.
Well, I'm the color guy. That's some color.
So the appraiser must be supplied with the improvement cost estimate and plan of or description of the work to be performed. So they don't need the exact tile you're gonna get from floor and decor, or the exact countertops, but they need to know, a rough budget, or is it granite or is it pusher block? Is it, like that is gonna help them right along with the cost estimate and for the appraiser to know how to value it, right? The appraiser will then supply the after approved property value, and any additional repairs required by an appraiser will result in the borrower having to include them in the additional work, right? So especially with FHA, they might say, hey, you didn't mention, you name it, right?
They've been paying outside.
Yeah, totally. Like you gotta include that too.
gotta
We can't do
Do it, yeah, you gotta do a repaint, you gotta do whatever, yeah.
Right.
And it just works. It's a whole system. We're kind of piecemeal here. It's like here's this piece and this piece of it. It flows really well because we just know how to do it really well when somebody decides to go for it.
But maybe your first one is 60 days.
Yeah.
Not like just.
Yeah, not only the client's experience needs to be obviously as streamlined, but they've never done it, they're a first time home buyer,
Right.
they're rolling in this kind of a loan. It adds a lot to the plate, and there's always so much high anxiety already.
Yes.
That we do have to handle a little bit more and explain more upfront so that we can set the proper expectation for that experience.
And to be fair for you guys, it's such work for us, but you're done. When it closes, you're not in the renovation part, you're not doing the loan, you're not doing the draws, you're not managing the contractor, so. You get paid at closing, you move on, not that you would just like leave your mind on the job.
I don't know the real.
You'll get the phone.
Never.
Yeah.
I don't wanna
Like,
downplay
talk to
that.
Yeah.
I don't wanna downplay that, but like,
You're not managing the construction, right?
Yeah.
right, so although that might seem like daunting in your head, you're just helping them get to close. And then you might have to go out in the country for a while. So. We'll have this in a presentation, mostly just for you, if you're having a talk with a contractor who's like, yeah, I'm interested in that, maybe they can, let's work together and get me on your list. You can show them, here's typically what they need, if you wanna start gathering that now.
So we could do this up front, and then how long is that valid for in your system?
So the next year's tax filing.
Okay.
And so it would be something if you thought, hey, I'm gonna create these opportunities when they're appropriate. I wanna have a couple people lined up that I know I can now just reference it, because most people don't really have people to go to typically. That when they're approved already, that you can say, there's this huge process that already has been completed, this will help streamline this. And two, then it gives you, of course, the ability to create more transactions and then have those relationships. But it does take a lot of data, other effort out of the way, time wise. The other thing is we get asked a lot, can you just recommend who is approved with your company? And we can't, because there's liability around that.
Sure.
If that doesn't go well,
Yeah.
it will come out, right?
Yeah.
When one transaction is not the same as the next one, and they were great here. And then all of a sudden, one is great here, and they come back to you and go, you who suggested we use them, we're now tying you into them, and now you're liable for the poor workmanship or whatever. Right, so unfortunately, you can't do that. It helps if it's the same people we've already approved, and we can say that, they go, I can say, who are you talking to, let me see if we already have them approved.
Right.
But I can't bring that person's gonna. Yeah, it would be so much easier if I can.
Yeah.
We can. But you can.
Alright, so after their loan closes, the balance of their loan are held in a construction holdback account. the permits are obtained, the draft process is managed by us. And then, as we mentioned, the surplus funds can be used to either for additional upgrade items if they want to, or they can just reduce the balance.
And that is subject to the loan type. FHA 203K will not let you do that. It's gotta be exactly what's on the bid sheet. The more or less. Regardless of what's left over.
Oh, sorry. Okay, so direct lender advantages. Oh, sorry. We can process this fast. Like I said, we have a whole team. They're super excited. They love this loan. They love talking to people. Sometimes you have to like bring them in of us because it's like, okay, they're just like trying, they're just getting their toe wet, but they really are a great team for this. When we process it all, close it all in-house, and we have the variety of loan programs. So this is how you're gonna implement it today. This is your implementation plan. For expireds and FISBOs that need love, you approach them with this renovation financing. We showed our AI flyer for coming here today, and those of you online, I'm gonna be sending you a little packet of flyers and social media posts. So you guys can put that stuff out there. And these will have your contact information, so you can have them ready for your next open house. You can rescue deals stalled by inspection issues, right? We talked about this in the last meeting. It's like, man, these buyers are tough on inspection. These sellers are tough on inspection. We come to an impasse, and sellers don't have equity to give up. The buyers don't have room to pay for it. Can we fix it with a renovation if the buyer still really wants the house?
Just as time. That's all. If you're at that stage of the contract, you've already come to 2-3 weeks into it. You'll definitely have to push that out, but it might be the solution to make it work. And we've done it, so it might be like still times.
Especially if it's like the 2 or 3K.
It's more cosmetic,
Yeah. So we already said you're gonna talk to some general contractors, and if you are going down this path, look at that ARB. For structuring the contract, as we mentioned, 45 to 60 day closing timeline. We're gonna communicate with that seller. They're gonna know, hey, we're doing this renovation financing. We need to add that some contractors and consultants we might have them in the property as we're going through contract to just help speed things along, right? We have to get the bid, the budget. So they need to kind of understand that that's gonna have a little more impact on people visiting their house than a normal transaction. And we're gonna try to give those contractors and your buyers really firm deadlines of you gotta make some decisions quick. We're gonna recycle this money here. Okay. So then, as also, sorry, I'm repeating some of this, for selling it to them, giving them that, hey, you put this much money in, this is how much value I think you're gonna get out of this. It's really gonna pay off. I think that sometimes they need the reality check of like, you're not gonna be able to live here while this is going on. You have a plan for that. And then obviously connect with us and we'll take it from there. All right, so I wanted to, we only have like 6 minutes left. My idea for this was to kind of do some role play to talk about these conversations. If you guys want to. Maybe you can take this side of the room or something like that. For those of you online, I think these are good conversation starters for buyers. And these are good conversation starters for sellers. I think that's the end of my presentation
You
here.
know what I think might be good use of that for 100%?
Yes.
In the next team rally, instead of the question of what would you we'll stand up and say, what about this?
Yeah.
We
Talk to
can
Chris.
bring
That's
this
a
up
good
there.
idea.
Oh.
That would be a great moment to share that, and maybe our presentation is, here's 2 slides of a reno program. How do you talk about it? Right?
Right.
You have enough reference to what a renovation is, I think.
Yeah.
And if you don't, this is a great way to look. In the combo, the quick time, you good with that?
Yeah.
That will have everybody involved and
Yeah.
excellent.
That's fun.
We can do it on the side of, we can go have cocktails and talk about
I like it.
role playing.
Next happy hour.
So.
Evidently we have to go bowling while we have the
Yes.
Because we just talked about
Staff only get to
No,
get.
you feel like
Only
it's
get
time.
together.
Well, they all go.
We should do that one, and staff like 25 people.
I was,
I didn't.
It was just different.
Of course you did.
Yeah, what do I-
Last station.
Okay.
Yeah.
So you can talk about it. So-
Also, not my fault that he poured like a triple shot.
I'm sure.
Who did that?
Very heavy,
At
heavy
Cucino.
feelings.
Yeah.
At the happy hour at Cucino.
Oh.
Turned into happy hour at the Elk.
I mean, this girl was not talking about how much I wanted shots, so I had to buy her a shot, but it was like, oh wow, I saw that.
Right, the Elks?
No, it was at Cucino.
It was.
If you were in Canada.
I was there.
In Canada.
Okay.
Yeah. Missed a good time.
Very fun. Yeah.
Well, that was the next
I
one.
can't wait to go home and have a.
Oh, and
shot
what
of-
is the next one?
It's the middle of the next month.
August. My God.
August.
People try to behave. Try.
Fun is- I find that is not behaving.
Yeah, exactly.
Anybody have any questions online?
Or one.
Mitch, I do have one question.
Oh, go ahead.
Oh, sorry. Do you guys have a fee schedule or something to get an idea if somebody's comparing like a construction loan versus a HELOC loan, to see what would make more sense?
Well, I can tell you, I don't think we have anything generated. We can pull the construction line item fees because we have that. I'll tell you, a HELOC is going to cost somebody $500 or less.
The HELOC will.
They are
make
very
more
expensive. If an appraisal is needed or not, will change that, but
Yeah.
typically they're very, very inexpensive. If you do a construction loan, it's factor a like a traditional loan where you've got about $4,000 in costs. Plus additional line items for a construction loan for draws and a consultant and all the things we just went through today. It's gonna probably add another $4,000. It could be $8,000 for a construction closing cost versus a typical 4,000. Just to
Awesome.
answer your question verbally now, so you have that feedback.
Yeah, the home equity line, I'm gonna go ahead and say will always be the better option if they can qualify for what they need.
Yeah, that's
Assuming
if
they
they
have the
already,
equity.
if they already own the home. We're also talking about people buying a home that they don't own yet, so they don't,
Right,
it's not,
right.
they don't have that access yet to
Right.
the equity.
But we will also tell people, hey, you have plenty of money for down payment. Like just put less down and pay for your own.
Do your own
renovations,
construction, right?
Right, because we don't wanna.
They don't have to.
Yeah.
Because there are extra fees and extra.
Yeah, it's not an extra, some more work for everybody
Right.
and.
If you have more money left over at the end, then you can do a recast. Like, so, right.
Good question, Diana.
Yeah.
Samantha, did you have a question?
Oh, I'm actually good. I was just like saying thank you guys, and
Oh, okay.
I'm here cooking for Battle of the Bites tomorrow. So,
Oh.
so I hope
Very
that
nice.
yeah. So I hope. Oh, I'm not supposed to say what I'm making, so it's all even.
I'm just testing you.
Oh, she's testing.
Always
Yeah, I'm a
very
fair
nice.
competitor.
Very cool.
Yeah,
All
but
right, good luck tomorrow.
thank you. I hope you guys will be there.
Of course.
All right, sounds good. See you guys. Thank you.
Bye.
Okay, thank
Thanks for
you.
joining us, you guys. Thanks for joining online. We'll make sure to get the slides up.
Thank you.
Thank you.
Thank you.
Candace, Deanna.
We'll just send it to the entire office.
Okay.
Yeah.
Wanted to get special things just for you today.
Okay. Well.
Don't bring them for.
$100 gift card too.
Yeah.
I'll take a picture. No?
Yes.
Guys. Okay.
Heather and.
Totally, I got it right.
Candace,
Deanna.
Candace. There was one more, Dion.
I missed the first one. Heather.
Heather's right here.
Yeah.
No, Heather's still there. Hi, Heather.
All right, here we go.
Hello. That was
All right.
really interesting.
We're
Thank
gonna
you
sign
so
off
much.
now.
Thank you.
Bye.
Bye.
Take care.